Hey, what's up, everybody? Today I'm in my spatial space, and I wanted to talk to you about regulation and crypto altcoins. I'm going to try to stick to more the crypto side rather than the NFT side because that's a whole nother can of worms. But the reason why I decided to make this video was some discussions that I had on Twitter and on some comment on YouTube about you know, why am I so concerned about it? Is this just flooding and toward the VeVe project? And the answer is no, it's not. It's more a state of the world, and it's something that I think is important. And again, of course, this is not financial advice. This is my opinion, but I'm going to state my opinion based on some of the facts and what is stated by players in this industry. So you guys can all make your own decisions. So full disclosure, I think regulation is a big problem. Number one, number two, and I'm spe- um, and I'm speaking specifically for the United States, not for any other country. I happen to be in the United States. I happen to be in Hawaii, which is one of the most anti-crypto states in the United States. So, speaking a little bit from experience here, I'm another part is I am also a crypto believer and a crypto investor. And the last thing is I'm going to focus my attention, around VeVe because that is where my largest NFT holding is, not my largest crypto holding. And as part of full disclosure, I did in the last this last week sell off about a third of my VeVe position, converting it to gems, at which at some point I will cash out and just to put on the side. Um, Also this week, for full disclosure, I did reestablish an OMI position, so I am invested in OMI. So again, this discussion is regulation in the U.S., and I'm going to start by talking about a couple of things. One is a lot of this has come from uh, the fall, the fallout from the failure of FTX. So now in the United States, we have a couple of things, two sides attacking the middle. In this case, the middle would be altcoins, which OMI is one of them. So let's look at this video from Trader University, and Trader University is a Bitcoin um, bull slash evangelist, and he's going to talk about what a security is.
So we need to rewind a bit. What's a security? In the US, a security, according to the Howey test, which is the test that's applied, a security is an investment of money in a common enterprise with a reasonable expectation of profit derived from the efforts of others. We've talked about this a little bit before in the channel, but I really want to explore it a little more deeply today. So an example of this would be Mark Zuckerberg raises money from investors to build Facebook. He uses the money that he's raised by selling stock privately in the company while it's still private. He uses the money to pay for developers and marketing, and then they build this addictive surveillance tool that harvests personal data, and Mark and his investors get rich. But the thing is, everything about Meta and Facebook are crappy, but at least they didn't violate US securities law when they did this. So this would be an example. Facebook stock is a security for these obvious reasons because Facebook or Meta passes the Howey test. It was an investment of money in a common enterprise. Now here's another example. Vitalik Buterin does a huge pre-mine and pre-sale and then uses that money to pay for Ethereum development and marketing over the following years. This is this is why I say that Ethereum is an unregistered security, because Ethereum really is a software company with a CEO that's masquerading, like so many other things in DeFi, masquerading as a decentralized project. And then it has the Ethereum Foundation, it has consensus, and so it's done this very clever way of trying to route around U.S. securities law. They did their ICO in Switzerland, for example. Now, everyone knows this, but I don't think people really realize how this was pitched as an investment.
So let's talk a little bit about that. So uh, Trader University is really anti-Ethereum, as you can tell by that. Uh, saying that he believes Ethereum is a security. Much of Gary Gensler's staff at the SEC, Gary Gensler, who's the chair of the SEC, his staff believes that Ethereum is not a security, and that'll be in the third video that we're looking at. But so that'll give you an idea of the Howey test, which I've talked about in previous videos. And so in this case, uh, you know, basically Trader University and the Bitcoin evangelists are saying that all the altcoins, of which Ecomi would be one of them, would be a security. So let's look at Gary Gensler's recent interview with Yahoo Finance and how he feels about crypto.
Chair Gensler, it is wonderful to be with you here at HQ.
Great to be with you, Jennifer, and your listeners.
Thanks so much for sitting down with me. So many lawmakers are pointing fingers at the SEC over FTX's collapse. You have said numerous times, rules, security laws are in place and they apply to crypto. This is an issue of non-compliance. Why didn't the SEC enforce rules on the books? Could that have prevented FTX's collapse?
We are enforcing them. The Securities and Exchange Commission, I couldn't be prouder, and started under my predecessor, Jay Clayton, has brought over 100 enforcement cases in this space. And what we've said to what is largely a non-compliant field, there's about 10,000 of these crypto tokens. And then there's not just dozens, but maybe hundreds of service providers.
Notice how he talks about
broker
the
dealers,
tokens and
they might call
exchanges.
themselves exchanges, they might call themselves other things. You might think of them as the casinos, wherein
Also check
the
out how
investing
often he
public
uses the
is
word
looking for a
casino.
better future. And because most of these tokens are securities, that means that the storefronts, if you wish, or the casinos, need to come into compliance with our time-tested laws. And what that means is basically not using customer funds as many of them do. Their business model right now is offering the public, they say, they're purporting to offer them an interest return in crypto. 4, 8, 12, sometimes 15 or even 20% returns, and then possibly trading against their customers, trading ahead of their customers, lending that out. Anywhere else in finance, these conflicts are not allowed and they're separated out. So we have publicly been saying to these crypto intermediaries, they might call themselves crypto lending, they might call them crypto exchanges, these crypto intermediaries, in essence the casinos, if I might say it again, to come into compliance with the law. We brought a number of actions. Crypto exchange Poloniex last year in September of 2021 when a large exchange, Coinbase, wanted to get into the crypto lending space. We said that would not be compliant with the laws the way they were set up. We brought actions against crypto lending platforms, including BlockFi, and we will continue to be a vigorous securities regulator, but I really do suggest to these intermediaries, these storefronts, these casinos, if you wish, to come into compliance, work with the SEC to get into compliance, disaggregate these businesses. This is a field that has caught the worldwide public attention around the globe. I would remind the public, if I could, this is a highly speculative asset class. These 10,000 projects, many will fail because entrepreneurs in all sorts of walks of business fail. Many will fail also because history tells us that we don't need and don't use microcurrencies. We have the dollar, we have the yen, we have the euro, we have the sterling, the pound. There's a reason for that economically. But if the investing public wants to invest in these tokens, they need the appropriate disclosure, just like they get the disclosure from the companies you might invest in the public markets. And the broker-dealers and the exchanges and the hedge funds, same thing. There's nothing incompatible about our securities laws and crypto. It's really just that there's a sort of a worldwide market. Much of this is offshore. I can't speak to any one matter, but I can quote from the bankruptcy court that just 2% of the customer assets at FTX were U.S. So it just gives you a sense of how much of this is a worldwide market as well.
Right. But
I've got one goal, is that these platforms, the exchanges, the lending platforms, come into compliance. They can do that appropriately, working with the SEC, or we can continue on the course with more enforcement actions, and I would have to say that the runway is getting shorter.
So one of the key things to note here is a couple of things. One is, Chair Gensler uses the word casino a lot. So he's likening it to gambling, and other things that he brought up was that it's a worldwide issue, and that much of the projects are offshore, and so that's one of the ways that they're looking at it. So this is again a U.S. specific issue. I want to make that clear. And let's look at the last clip, which is actually before the prior clip, which was after FTX. This is prior to FTX in a hearing, a Senate hearing in July of 2022. The person questioning Gary Gensler is Senator Pat Toomey, a Republican out of Pennsylvania, who on today of 12/16 has announced his retirement from the Senate.
Thank you, Mr. Chairman. Chairman Gensler, in your written statement, you acknowledged, as you have in the past, that there are some tokens that are not securities. And I know your view that whether or not a digital asset is a security is a facts and circumstances analysis. I know your view that the SEC has very broad authority. But you've also made it clear in the past that Bitcoin is not a security. Now, some SEC staff have also previously said that Ethereum is not a security. The SEC's Dow report characterizes Ethereum as decentralized. So here's my question briefly, and without getting deep into the weeds on this, and I acknowledge your belief that most tokens have a large degree of central control, but generally speaking, is it fair to say that a significant factor for you in whether or not a digital asset is a security is whether it is centrally controlled or decentralized?
Well, I look to the Supreme Court that's often written about this, probably close to a dozen times in 50 years, and it's whether the investing public is anticipating profits, and that includes anticipating profits from appreciation as well as from, as you mentioned, rights, based upon a common enterprise, but
right.
The efforts of that common enterprise.
Right. So I guess another way to put my question, which you haven't answered, is it possible to have a common enterprise if it's something is decentralized? How could I have a common enterprise? I mean, it doesn't isn't centralization necessary to constitute a common enterprise?
You could have some things that are quite open, but still have, if the public is anticipating a profit based upon that common enterprise. So I'm being careful with my words here to be accurate as best I can. The common enterprise, are you relying on a group of individuals? And look, these are not laundromat tokens. There is a group of people that are actually...
You're not answering my question, though. But so let me try it this way. What is it about Bitcoin that causes you to conclude it is not a security?
Well, one is there's no group of individuals in the middle.
Right, it's
there's
decentralized.
no group of individuals in the middle.
Right.
That are basically, and you're not in essence, the
So,
investing public's not betting on somebody in the middle or 6 people in the
so
middle.
you're choosing not to use the term decentralized, but that's what you're describing. It is the decentralized nature of Bitcoin, I think, is really what you're getting at. Here's my point, and I'm going to run out of time here, but there are a lot of projects, as you know, that, I mean, decentralization and centralization occurs on a continuum, really, I think. And you've acknowledged that there are tokens, plural, that are not securities. I think it's because of this centralization that you come to this conclusion. And my point is, it is not reasonable to fail to provide clarity, to provide the definition of exactly where on this continuum you have a sufficient common enterprise that it qualifies as a security, and where you don't. You've said Bitcoin doesn't. Some of your colleagues have said Ethereum doesn't. But a reasonable developer who wants to comply with this doesn't know where that line is drawn.
So one of the key things here is, and again, let's look at this is my discussion is specifically for the United States. It's the political winds after FTX are clearly blowing to regulation of the crypto industry, and they're clearly targeted at altcoins. So if we're looking at VeVe and Ecomi, OMI, whatever, it's the OMI that is the focus of this particular discussion. The NFTs, again, as I said, are another discussion. Now, I've talked in previous videos about that I initially thought, and this is based on the terms of service and what you can look up in the filings on in the internet, the corporate filings, that Orbis blockchain, and which is in the VeVe terms of service, that uh, in the VeVe terms of service on their website, the term VeVe applies to Orbis blockchain, and there's a separate corporate registration for them, and which is in New Zealand, and there's also a separate corporate registration for Ecomi Limited, which is in Singapore, and so they seem to be separate companies. But in one filing that I saw, uh, uh, that it it said that Ecomi, formerly known as Orbis Blockchain. So I don't know what their corporate structure is, but it kind of doesn't matter. You know, uh, I actually thought I I actually think that it's better if they are separate for this problem that we're looking at here, but who knows what it is? It's neither here nor there. So how does this affect OMI and uh, VeVe? Number one is if the winds blow this ship toward regulation, and the ship reaches shore, um, most likely OMI would be classified as a security in the United States, and all Ecomi Limited would have to do at that point was um, register with the SEC, and come into compliance, and it'd be fine. Uh, the alternative is that they don't register in the SEC, with the SEC, and basically all that would mean is it couldn't be traded legally in the United States. So does that kill VeVe? Absolutely not. Now, uh, again, the NFTs are another issue. It's not the topic of this discussion, but one thing that what I just wanted to share one thing is what attracted me to VeVe initially was not only IP, but how they designed how you would buy it, which is using gems. So it was like a game, and it'd be in-app currency. And I'm thinking of making a video on this. This is how I think my opinion is, they're getting like how SendWire is getting around the restrictions in the various states. Is it's not crypto to fiat. It's in-game currency to fiat, and that's kind of like a loophole that they're using, but I don't know that for sure. That's my speculation. So in I'm thinking it's, and again, this is my opinion, that VeVe adding crypto to the app is going to be a problem in the United States specifically. And is this problem insurmountable? No. All they have to do is just say, not available in the US. You can trade in fiat to gems in the in-game currency, and that's it. But it would put U.S. collectors at a disadvantage. If it was a security, got ruled a security, only got ruled a security, and the clear word is and, Ecomi Limited doesn't register with the SEC, that would just mean that you couldn't use OMI in the United States, and that would put the U.S. United States collectors at a disadvantage. We just have MCP. Uh, so that would, to me, dramatically affect the user base. Um, so regulation, the issue of regulation is real. Other people are making videos on this topic. Few of them have spoken out about it. Cavell has even spoken out about it. Uh, and, you know, I really um, believe that we all need to pay attention to this. Not we all being VV investors or collectors, but all of us who are believers in this space and the believers in crypto. It's going to be an interesting time in the U.S. So this is not FUD. These are the political winds of change in the United States of America as a result of one man's debacle at FTX has brought all of this to the forefront, and it has aligned the Bitcoin purists and the politicians and the regulators against altcoins that are unregulated. Um, please leave your comments below. I'd love to interact with you on Twitter and on YouTube. Thanks for watching, and aloha.